Looking at the potential risks, we first look at the economic outlook. With the decrease in income of the average American, we see that normal goods, which we sell, are the first to go. But one of the mitigations of this is that we have an increasing consumer of the older generation, which is the baby boomers, which are expected to grow from 9.3 million to 19.5 million. These, instead of actually buying new houses, this generation actually looks to renovate their household with better quality products, which we do sell. Looking at the next potential risk is the sluggish housing market. With this, we actually see that in a 60-year low of the mortgage rates, home purchasing seems to be in phase. And a large portion of BBBY retail are household products. The mitigation of this is that many people, instead of buying new houses, they look to remodel their old ones. In doing this, the remodeling process, we sell a lot of the products that they will buy when they're refurnishing their kitchen and their bedrooms. Oh, I'm sorry. The e-commerce is another risk that we looked into, and as consumers begin to buy more products online, we see this as a takeaway from our business. But as we look at it more closely, the typical consumer profile for our company seems to want more physical interaction, especially with the higher quality products. Because if you're going to sleep in your bed, you will want to feel and touch the actual product that you're going to buy, and compared to just seeing it online. The next is the increasing competition. This goes hand in hand with the slumping economy, where people seem to want to buy for less when the economy is down at discounted retailers such as Walmart and Target. Here we have greater visibility, and we look at different markets such as the buy baby growth that we see, as we have $1.1 billion to expand. In this, we diversify our products and we put less stress on the actual housing products. That is our main focus. The next is we have a consumer brand. Consumers actually look to our company, and they're used to going to our product line, and they're going to buy our products just because they've been buying our products for a very long time.
So now we are looking at the comparables. So we compared our company to Bed Bath & Beyond, to Williams Sonoma, or Pier 1 Imports. You see here our company has like high revenue compared to other competitors, and then P ratio is lower than other competitors, and our Ford P ratio is like even lower. It indicates that our company has like a lot of potential to grow in the future. DCF, the WACC percentage was like 8.7%, and then the targeted price was $64.36, and then we're trading at $61.24. Some of you might be a little bit icky about it because we're only getting our upside potential is only 5%, but we're projecting. I think we're at some point conservative with our number, and at the same time, there's like holiday season is coming up quickly, and then we expect that our revenue will grow as well. So this is our DCF, and in conclusion, Kevin's going to wrap it up for us.
So in conclusion, a quick shakedown. We have incremental returns as we continue to keep growing, and with decreasing costs as the real estate market hasn't been doing great. We have increased productivity through continual renovations and refurbishing. We have competitive pricing by leveraging our current supply chain, allow us to keep our costs low while keeping our products in high quality, and we have growth opportunity because we have a lot of cash on hand, and market saturation has not yet been reached, not only in Bed Bath & Beyond, but also through Bob & Baby, which management does seek to grow in these next 2 years.
So our investment recommendation was that we recommend investing in BBBY at $6 and as soon as possible. Like, it's going to be a really short-term investment, and in addition to that, in addition to that, it will help us diversify our portfolio. We only have one retail stock, which is Kohl's. Questions? Yes.
Wait, so did you say that you wanted a short-term exit, or did you say you had a short-term to get in at a $60 price point?
We're gonna right now all the indicators are bearish, but we're expecting it's gonna have it's gonna spark a little bit. So we want to invest in as soon as possible, and then when we see that potential, when we see the stock price going up a little bit, and then we're gonna wait a little bit, and then we're gonna get out of it. So it's gonna be really short-term investment.
We expect it to go with the holiday season.
Especially since they're about to release their earnings, and that's definitely going to bring up a little bit more.
Yes.
Do you do a revenue breakdown based on each type of store that Bed Bath & Beyond owns?
Can you say it again?
A revenue breakdown, how much each type of store owns? You said there's 4 stores composed of Bed Bath & Beyond.
So they're generating a lot of revenue. The majority of revenue is coming from Bed Bath & Beyond, which sells the home furnishing retail industry, and then at this moment they're not really making that much money out of 3 subsidiaries. However, they're expecting to expand their baby Bye Baby retail, so they're trying to generate revenue in that area as well.
Yeah, I know in 2010 they expanded their store count by 40. They made 40 new stores. 18 of those were Bed Bath & Beyond. 16 of those were Bye Baby. So as you can see, they see something in Bye Baby that they're trying to push for. They're trying to get more of that out there because they believe they can make a lot of money off of that.
So how do they look internationally? Where are they?
Well, right now we only, our main target is U.S. We operate in 50 states, but however, we operate in Canada and Mexico. And we don't really have that much of international presence.
But they are looking to expand. Do they have their foot in the door in Canada and Mexico? And then given their previous patterns, they're definitely going to expand in these areas.
Yeah, keep in mind their first international store was put in Canada, and that was only in 2007. 2008 they put in 2 new stores in Mexico, so they are definitely looking to expand internationally.
Any more questions? No, we're gonna go.
All right.
Okay, so who has to, if you raise your hand if you have to answer, or you want to turn in your question of the week really fast, we have one you want to turn in, so I can come pick it up for you. You got one? Okay. I'll come get it. Does anyone else have any answers to the question of the week? Over there? All right. Any more last minute entries? Oh, you got some? Okay, sweet. Okay, this one's at Harvard.
I got this. We all are. So that's what I'm saying. We should.
All right, we got Parker Kim with the right answer of Italy. So